Normally, I will start these crypto day morning videos off by showing Bitcoin, talking about the matching lows, lower highs on the longer term time frame, and in the current market movements, how the market's really just not moving at all with all this low volatility. And in this case, this is the third day now, well under 1% within each day. So that's what I normally start videos off with. And lately, I've been showing my trades in situations like this with BCPT, where I would buy at 1751 and then put new buy and sell orders in. And then talking about things like I'll put a buy order at this level of support, sell order of that level of resistance, and then yada, yada, yada. And I'll probably keep doing this for the next several days, close to a week or such. But this video is all about Litecoin. As I've only made one trade in the last day, already shown, and I've already talked about Bitcoin in this video. Okay. Now, Litecoin, I last bought, as you can see, there's just small lines with each one of these, and that's the strategy that I'm using within such. So I bought right around 780. I missed this buy at 760. So be it. And possibly moving up to this level. But Litecoin against Bitcoin has shown this. And just so I don't have to have these lines in, I'm going to put in a different exchange. I'm going to put the Poloniex exchange in instead. And what we're seeing within the market from that low is how it has made a move above the 18 average of highs. Really, it's that simple. I mean, getting more technical or more details, when it made its move to the 18 average of highs, it had a pause day yesterday and then continuation, and a good continuation breakout move higher. We'll look at this on the short term, but let's look at what's been going on with Bitcoin during this bear market every time it tries to get above the 18 highs. Noticeably above it. I mean, you got these little pierces on September 14th and 15th. That's a small attempt for those ones, but the real attempts. So when it got out above it on September 21st, that was a real attempt. And it managed to have a leg higher. One successful correction, and a deep one at that too, because it went below these lows here. Thus, short term, when you see that it broke down on the date of September 25th, the previous day's lows and a couple days before that, or 3 days, a couple days before that, breaking down below that low, that was a short-term support level it took out and quickly rose higher. So that was that failed breakout, but it didn't do anything more than make its final leg higher because it had an unsuccessful correction within the 18, not correcting much at the 18 highs and then falling from there quickly to the 18 lows, and then just showing strength and consolidating bear flag amongst the 18 average of lows. And really that set up 2 legs lower to previous low. Previous low being here. Leg 1 lower was that on the single day of October 11th, and leg 2 lower was a little bit, it started October 21st and it had its good day on October 29th. Okay, so on that situation, getting above it, it didn't do much at all. This one here, it had an unsuccessful correctionary move on as test number 1, when on September 5th it had its big red down day to the 18 lows, again showing weakness amongst the 18 lows and 1 leg lower. Before that, and let's take the drawings away, we have nothing but resistance from the 18 highs. And from what point? But the 0.0166, or it would need to go up 100% or it's lost half its value from that point against Bitcoin. It established a huge level of support at 156, and it was just a continuous move lower over several weeks thereafter. And it had a move above the 18 in here, failed. So it's been unable to have any big moves, obviously, in this run. And it really didn't have an April Fool's rally for the most part. Because April 1st is, because what happened with most of the markets is on April 1st, they all bottomed. Sort of like this did on March 29th. And then roughly around May 1st, they all topped. And May 1st here is right in here. So it didn't do much. But looks can be deceiving. It totally did participate in such I'm going to go short-term analysis on this, and I'm going to do more longer term, and then we're going to show you why when I look at the cross against the US dollar. So then let's, before we go long term, let's look at the short-term analysis. So we're looking at this breakout. We're looking at this possible failed move down below here and how fast it regained itself. So this little sell-off on October the 29th. Let's start off with the 400-minute time frame. And that's a single move lower that it hit. Fast move. Little bit of bearish consolidation. Why I say that? It's bearish just to go. It's a bear flag. But it was making higher lows and higher highs along the way. So that might sound weird, but just the way I'm trying to look at it. This interesting green candle period here, which had this nice low breaking down below here. Not by much, but it technically did. And then like a bear or bull flag on this situation, because the market went up and it went sideways near the high point. And then when it broke resistance, leg higher, bull flag, breakout, leg higher. 3-hour time frame. And I'm looking at these short terms for the first time myself. And in a while, of course. So therefore, the first time amongst this data. And amongst this, we can see it comes back to where it came from. There again, this little move in here. Market was going down. It broke down below the level of support, really between the 775 down to the 773 handle, going down to 769. But after that point, it got above this level, supported where it came from, nice leg higher, all that type of stuff. But this thing, let's take a look at this on the single-hour time frame just to get a better perspective. When did this thing start breaking out? Well, it came down from these lows at 1 o'clock in the morning. And then the next hour at 1 o'clock in the morning, it started to go up nicely, a sideways move, 2 single hours up, and it's now starting to consolidate. It can go down quite a bit more to have a successful correction. Even as deep, although you don't want to see that, 808, unless you got a buy order there, of course. I like to see a deep correction move within the 18 average in here. And unless it does it now, the 18 average of lows is still a pierce above right now. And I don't see it happening this particular hour, although the hour just started at 7:02 in the morning. Although it's like 8:02 for me because it was 1 o'clock. So the time changed. At least it did in most parts of North America, I would think, and maybe other parts of the world. Not too sure, but it was done here. And now let's take a look at this on a more longer term time frame. So we looked at it on the daily. How about the 3-day chart? And I've talked a lot about these fast moves up on Litecoin when I talk about these long-term charts, because that's what this is so fascinating. And this grind lower is nothing compared to 2016 and 2015, at least 2016. We'll get to that very soon. And amongst this in here, straight down move, it's really done nothing more than consolidate through time, grinding its way on the low end. So any rally amongst such brings us to only resistance point we have here is the high 900s. So a little under the 1 number, mainly between the 930 handle up to the 947 handle. Getting above that, there's a small little congestion area around 124. And then, of course, the big area between 135 and low 160s as key areas amongst it. But as again, when these things go up, they can go up big, as was the case in here. Notice that this had the failed breakdown going from the 5 handle all the way up north of the 20 handle. So better than a 4x move, and we can see that in just like 1 week, it had the majority of its gains at that time. Weekly chart. There's the bigger move up last year. For what was the story of the market? And let's even look at some more data points in here. We'll ignore these days in here, albeit, at least starting from, not counting the first couple, but counting this one, and this one, if they were real, only price pays. Okay, only price pays. Think about what that means. And in a situation when you have sell orders in here, that means somebody pushed the buy button some way, somehow, that affected every single sell order. In this case, on the Poloniex exchange, up to 0.0185. So any sell orders any people had below that got executed, and the price came back. What was the high again here? No, excuse me, 0.0322, with the price coming back to 108, 107 area. So all of those sells come into play. But that really isn't where the market, I mean, it wasn't a real move. So as far as looking at how the analysis goes, yeah, I'll count this high. But all sell orders that came in there got activated. In this case in here, when you think about the buy low, sell high strategy, if you were aggressive to the monstrous degree of having buy and sell orders in, that means the market overall was down pretty much straight here with a couple, 3 decent sell opportunities, being 1 sell opportunity, 2, 3. But if you have a whole bunch of buy orders, 50, 60 buy orders, every whatever amount of basis points, same thing on the sell orders. That means during these few weeks in here, you are getting sell orders city like no other. But all you've been doing lately has been buying, for the most part. I mean, a little bit of selling along the way. But when you figure, if you got into Litecoin back when it started, when it was 0.0239, and you started putting buy orders and sell orders in, you're really not going to be selling to start. It's going to be buy, 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 all the way down. And then you sell a bit, but you're still down. And then you buy more, and you might have to go to the bank machine to get more funds just to keep playing this game. That's how big this decline is. And then it keeps going down. So at the point, and I should do another buy low, sell high video on this exact chart. I probably should, or at least do it on the computer, or at least do it on a spreadsheet or on a basic programming language. Where at the point here, when it was 0056, if you were to make your buy order there, it's like, holy crap, look at my portfolio. I mean, it's marginally better than it was up down here, and it's really bad. But then over the next little week, sell, 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 sell. And then when your portfolio's up here, like, oh my goodness, I'm up, yet the market's down. That's what would be happening. And then on the period of when this happened, you're going to get all of these sell orders come in, and it comes back, and the value after that trade of your portfolio is just so magnificent. And the status of this market from here to the 2017 lows was grinding its way lower. Not much for selling at all. Not much. Only 2 good ones. One because of this awesome buy, and then this one up here in the May highs of 2016. But at this stage here, if you had, say, 50 buy orders back when it was around our current price now, and say around Christmas of 2014, if you had 50 buy orders, then how many buy orders do you have up here? 250, 175? I'm just saying, because every single time that you're selling, oh, I sold that the 100 handle, buy order 0.09, and then the smart strategy in this, say you are selling, buying just 10% cheaper, is when you get all of these sales, it's like, you know what, I want some of these to be 30, 40, 50% buybacks. Just because when markets go up really fast, you play the volatility, and the volatility is higher. So you play it for the bigger moves. And then all of a sudden, hopefully almost every single buy order you have got hit on the September 14th period. And in situations like this, it's like a lottery slot machine kind of win. but you'll take it when you can get it. And there really isn't a cost in playing it when you're already playing the game as it is anyway. And if you're just holding Bitcoin, what's the difference if they're buy orders or if they're just held? If you're planning on buying it anyway when it goes down there. So to me, I look at that as no cost. So at this stage, you're at the point where you can sell a whole bunch and then replace those buy orders, and the profits would be magnificent to the stage where the value of your portfolio here, when it came back to 122, to the time when it came back down to 003, would have lost a lot. But you would have seen it be worth like amazing profits. And I'd be curious actually to see the value of your portfolio right here at the bottom, starting, as I've been stating, really from day like 20 on here. Pretty much day one, but after the settling. So pretty much from like, yeah, before the fall. Buying before it falls. I'm going to do this in another time soon. It'll be fun. I just don't know how I'm going to present it, because if I do it like I normally would, it would take a long time to do. So I might think about putting a computer script in for this one. But not really. Yeah, you know what? I could put a computer script in with manual play, yeah. A lot you can do. Programming can do a lot. Anyway. So from this low, again, all of these sell orders would be just going boom, 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 boom. So the story of the market from here was beautiful choppiness that would go on to the early 2018 highs. So after this high, about over a half a year of choppiness, because you have a beautiful down move into here, creating nothing but spectacular buy orders down to here, selling back, buying back, selling, buying, small sell up to the 18 lows, but not much, and then getting some buy orders hit before it goes up. That is just beautiful when you get the failed moves first now, because you're going to get every single buy order that happens down below, every single one, up down to, of course, 0054-ish. And then it starts going back up, sell order city. You get a small buy order back when it comes near the 18 lows. And then you're selling up top, and then you're buying, and then that's all it's been pretty much since then. It's been buying. But as it's been going up every single time, it's had monstrous up moves. And I'd pretty much like to expect the same. I didn't think I was going to talk about this long. I was expecting this to be a 12-13 minute video. We're going to be breaking 20 minutes because I still got a few other crosses to show. So we're done against Bitcoin. Let's look at the US dollar next. But before we do that, what I was saying on the outset was this did not participate in the April Fool's rally. When we look at this against the dollar, it sure did. As it's up 4.16%, just like Bitcoin, doing the same thing, getting above the 18 average of highs. The previous times it got above it, it had the exact same look, pretty much unable to make a move, as it had its breakout on September, but it was unable to hold it. However, the April Fool's rally in here, there we have it. There's the low, March 28th, very late. A lagger in going up, because a lot of the other coins were going up like literally around April 1st, April 2nd. This topped about May the 6th. So it had a move from 112 north to about 180. And since that, it's just had a very wicked fall within its moves. And it's had major moves before. Of course, the last rally that it had went from below where we are now, but pretty darn near close at 44, up to like 350 really fast. And it's done this many times. Other cryptos do this many times. And whether the action is, say, 350 high down to, say, here, 7x, 8x move, a 2x move, or a 40x move, Fibonacci retracement, at least the way I mathematically calculate it, which is high divided by low, which is a differential of the move, the X move that it happens to be, to the root of the Fibonacci numbers like decimal 382, decimal 618 and such, and then multiply that number by the low again, that the markets are going to just work within its own volatility pretty much all the time. So it's not like, oh, a market's supposed to go up 4% because of this. No. Maybe 4% of its retracement, yes. Or 40% of its retracement, yes. And that's why it's good to know how a lot of these coins are going to move for their volatile nature. And in this, its volatile nature says it would not be a surprise if this has a fast move to 116. And if it doesn't do what it does before, as I stated, not does, and then maybe it'll come back, find some support down here, and then come up to its next resistance level, maybe go sideways and correct there. But what it has been doing is just taking out resistance points like it's nothing. Case in point. Well, in the correctionary phases here, it came up fast. It just had this one sideways move. But when it got up here now, it just had a monstrous move. Yeah, I will be actually kind of curious, now that I say this, how the volatile moves will work within a correctionary mode. Because markets are either going to be going up or going down. Or sideways, I guess, too. But when they're going up, you're either going to be going up correctionary or making new highs. So in here, it was going up, making new highs. Going down in a correctionary mode. Going up in a correctionary mode. So on and so forth. So the correctionary mode, you have to have what a key high and a key low is. Key low, key high. And the only way it's going to be like just making up moves or uptrend in like upstage or upside targets, that is when it gets above it. But it's good to know, I guess, that you're usually always going to be in some sort of correctionary mode up, correctionary mode down, within key levels at all times with pretty much every market. At least once they develop enough data to have such, so many periods in. And in that case, it's understanding the situations because, say for example here, we can quickly take a look to see what the areas would be if Litecoin starts to go up. So we have a high in the area of about 365 and a low at about 50. So 100 even is important, but it's really not. 80 is like what it needs to get above to start saying, okay, it's now looking like it's leaving the bear market. We might start to see if it breaks above 80, that it's going to break well above 100. So the key numbers are 107 and 171, but they usually pierce extra. And 107, you're looking at, yeah, I mean, if it's going to have a decent move, it matches a key level. This level of support, I'd really be looking for a fast move to get to this 113 level. And either find resistance here, but it didn't find resistance here at this point here at, say, 74. That's what I was trying to say before the whole time about these fast moves. If it does what it normally has been doing is going down like this, and then it's up here, and it just breaks through so fast. But yeah, I'd be looking for resistance amongst this. I got to get this video over with, so let's just move this cross over to Binance. And this market has been in a sideways range for quite some time. This is pretty much the entirety of it. Nothing but straight down. Now, the beauty of taking a coin against another whatever coin, like a Monero or this, is you should be getting more choppy markets. That's the design of it, because they're each going to have their own moves, and it really isn't people betting this chart in particular. It's just what does this price happen to be? Because when you're talking about trading Litecoin, you're really mainly talking about trading it against the dollar and Bitcoin. So therefore, it's mainly taking these two numbers of the Binance coin, which is also primarily traded, other than its main exchange, it's primarily traded against the dollar and Bitcoin as well, that you take the two numbers, you divide it by each other, and that's what you're going to get. And the prices are going to move accordingly. And you're going to have situations where Litecoin goes way up, and this is going to go way up. And Litecoin goes way down, and of course, well, this went way down. As far as seeing this move in general, when you look at this, say, on a more longer term time frame, we don't have enough data yet to show the very long term. But within this, it's going to have decent moves up, decent moves down. It's going to be very interesting, the movements of this chart. And I think it's going to have a decent leg higher. And could it get to 80 and such? Well, yeah, very certainly. But lately, it's been not moving much. It's been low volatile moves. If we just take a look at one of these random days, a high of 545, a low of 535. That's barely 2%. So for the alt trading business, that's really, really, really bad. But that's what's going to happen with these markets. They're going to have some interesting moves. And for me, I'm buying next at 461. I'm selling next at 629. And overall, I haven't really been trading much Litecoin because it's been moving overall in a lower volatile measure and more of these sideways moves. And the Litecoin against Ethereum, and I have key Fibonacci lines in this. These are not necessarily buy orders, but it's been, of course, going sideways amongst Ethereum for quite some time as well. Ethereum has been hit relatively hard, if not even harder this year. At least, depending on the time frame, we can see that Litecoin had a tremendous rally amongst such from these moves. But this is what I'm stating as far as how these markets are just supposed to choppily be moving back and forth. Because with Ethereum, you're concerned about its price against the dollar and Bitcoin. Same thing with Litecoin. And it's now a measure of dividing each of these numbers by the two. And the trades are always going to work out this way. And the reason for that is because the art of the arbitrage will always make it to be so. And when these markets trade on very good volume, these submarkets, the price action will always, for the most part, be very fair to what the price of the division is. For example, this is Bittrex having a price of 0.264. Let's take a look at the price of both Litecoin and Ethereum and do a dividing ourselves. Well, Ethereum is $200.44, Litecoin $53.21. We got a differential of 376. So going back to the chart, we got 0.264, but that's because I should have divided one by the other, which can be very easily fixed by doing this, which says 0.2654. Pretty much the same number. Thank you for tuning in and have yourself a great day. Bye-bye.